Well, welcome to everybody that came. Greatly appreciating you sharing this time with me. I was thinking about something today, which I haven't really shared with anyone before. Yeah, I think a lot of people have a conception about where I came from or what I did, and may or may not be correct. The first job I ever had, I used to go around the neighborhood selling pine cones at Christmas time. But I graduated to a goody two-shoe stock clerk, traveled by bicycle every day, 5 miles each way from my home, 35 cents an hour. And that money went to feed us, myself and my parents. From there, I went to kind of uneventful getting through high school, except for every summer I had a bad motorcycle accident, which one time put me in the hospital for 10 days in a coma. But nonetheless, got married and got out of, into the real world and started working at the local grocery store, first as a clerk and then as a cashier and then as an assistant manager, and realized this isn't what I want to do the rest of my life. And I decided I'm going to college. I'm going to go to the University of Florida and see what I can do up there. We had no money, and I decided I was going to develop a system of playing the dogs and highlight, betting system. So I took our rent money, which wasn't a lot, but it was all we had, and I went to the dog track, and I bet first race a dog called Little Raven. What's interesting is not only did it win, I was wheeling quinellas, but I won like $140, which was probably what I was making in a week at the time. And that began a career of every summer coming back from college, going to the track. I was a professional gambler and using the money that I earned to go back and support myself at school. When I was at school, I worked in the girls' dorm as a switchboard operator. I worked in the gross anatomy lab. If you don't know what that is, that's where you work on cadavers for the medical school. My job was to use a bandsaw to cut the cadavers for the students to work with, but it paid money. At that time, tuition was $300 for a class, and I went through quarters, trimesters, and semesters until I got it together. When I got to college, I went to the counselor and I said, what pays the most? And she said, well, if you can get in chemical engineering, but it's really kind of tough to get in. So I did get in, and I got into a 5-year program. I graduated in 3 years, and I was off to what turned out to be the highest paying fresh out, as they call them in college, $1,250 a month. And I moved to Chicago. Nan, I, the baby, and our 54 Chevy. We arrived in Chicago in the middle of the Democratic National Convention riots. Drove into downtown Chicago and everybody was in riot gear, and it was a mess. Prior to that, however, I want to make a point here. One of the things I've done is not go with the herd. Right now, the COVID-19 is a national crisis, and it's going to be with us in the future for years to come. It's not necessarily the virus itself, but the aftermath of what's being done now to take us through it. So when I was in college, the Vietnam War came up. Because I had a child, I was listed 3A. A lot of the guys in the flavettes, as they call them at college, were also 3As, or some were 1As if they didn't have children. And they had a big meeting and they said, look, you have to go and get a 2S deferment. That's a student deferment. They're not going to draft students. So I said, well, what if they do? And they said, they're not going to draft students. So all the guys switched. I did not. And what happened is all those guys were drafted. Probably a third of them didn't come back. The ones that did were severely damaged, either emotionally or physically. At any rate, I got to Chicago, took up my engineering position. We're brain trust. From the trust-busting days of Standard Oil in the 30s, all the oil companies put their patents into this company called Universal Oil Products. They hired people who were, I'm going to say, on the brainy side. I don't know I was that brainy, but nonetheless, I developed certain things for them, one of which was a patent on a product called Platformate, which is Shell's product for platinum catalyst. I realized after a very hard winter, we had 13 straight days where it didn't get above zero, not freezing, zero. Nan decided, I don't care about the change in the color of the leaves. I want to go back to Florida. I said, I do too. So I came back. There's no chemical engineering jobs in South Florida at the time. I was born in Miami. That's where we came back to. And I decided the guy who was doing my commodity transactions for me, the broker, made a lot of money. But I came back and I went around to all the brokerage firms. I said, I want to be a broker. Here's my trading record, which I showed them, and they said, yeah, it's not going to work. And I said, what do you mean it's not going to work? Look how well I've done. They said, no. We don't want people who can trade. We want people who can raise money and put it into stocks and let it set. So I found a guy who was retiring, and he said, I'll take a chance on you. Merrill Lynch, Pierce, Fenner, and Smith, who is now Merrill Lynch, hired me as a broker. I went to New York, 6 months training, came back, sat down. Dow was at 850. That's the same Dow that's now at 22,000. I think it closed at today. How did it get from 850 to 22,000? They changed out the stocks. But anyway, I'm sitting there at 850, and they throw a telephone book at me, and they say, okay, here's all your prospects. So I started calling, and I realized I found some techniques to be able to get people and open new accounts. I opened a lot of new accounts. But as I sat and looked at the Dow, 2 weeks later, it was 750, and pretty soon it was at 350, and the people that I called really didn't want to talk to me. So I decided I have to change strategies. Everybody else in here is pitching stocks because they're so cheap, but nobody wants to spend money on stocks. So I decided I'm going to talk about wealth accumulation and safe money. So I would go to people and say, I know you have CDs. As a matter of fact, at the time, what banks did is they threw their papers with all the clients into the dumpsters. They didn't grind them. So as silly as it sounds, we would go dumpster diving, get lists of people that had CDs. We knew when they were, coming up for whatever. And at the time, interest rates were pretty high. As a matter of fact, in tax-free bonds, they were as high as 7.5% for Dade County itself, which meant at that time, tax rates were 50%. That was equivalent to a 15% return with the safety of Dade County behind it and so on. I didn't do that. What I did is I went to people who had a lot of money. And I'm not going to mention names, but they've obviously since passed because it's a while ago. But I would say to them, look, I want safe money. What are you getting? I'm getting a couple percent in the bank. So what if I could get you a couple percent tax-free? They'd say, show me. And they would give me $1 million. And what would I make on $1 million? Virtually nothing. About $100. But the next time I came to them, they would give me $10 million. Pretty soon I had like $100 million under control. And when they're called TANs and bands, when they came due, they're always 30 or 60 days or 90 days at the most. I had to go into another instrument. And very, very quickly, I became one of the largest producers in the Merrill Lynch system, working with people's safe money. In coming up quickly to 1975, I decided I wanted something that was different, in the sense that I learned a lot about what happens in the stock market. For example, Merrill Lynch had a stock called Automated Sprinkler. They pitched it, and they took it from $5 a share. It went all the way up to $125. My branch manager sold out because he was going to Europe. When he came back, they announced it was going bankrupt, and Merrill Lynch had shorted the stock from $10 to $125. SEC came in, but the reality was at the same time all this is happening, the second largest brokerage firm called Goodbody and Company was going bankrupt. They had switched from a manual posting of accounts to, lo and behold, computers. Computers defaulted, and the Fed and the President of the United States came to Merrill Lynch and said, there's no insurance, and you guys are going to take over all their accounts or the country is going to fail. And he was right. The banks would have failed. Everything that our worst imagination that can happen would have happened. So what happened? We took it over and went forward. That brings me into my personal investing career. It started in 1975, and in 2006, I actually did a program for DREA, and I opened up my first mentoring session. Prior to that, Nan and I just did it. Just loved doing houses. Rehab for 25 years. But we found out realistically that doing wholesaling, we made more money in 2 or 3 wholesale deals than we did in each of our rehabs, even though we were averaging net profits of over 50 grand. So we switched. So in 2006, Drea came to me and said, would you like to do a meeting? And I said, I'd really like to do that. So I put together a program. Out of that program, and since then in the program that we've had with the mentoring students, I have 14 students now who are either national or local gurus in the sense that they charge for their mentoring, which is, I assume, what I taught them because they're still doing the same thing. That works. So this brings us forward to today. What I'm saying to you is I've been through the Liberty City riots. I've been through all these catastrophes the United States has faced. And as a broker, commodity broker, stock broker, certified financial planner, I've seen these horrific situations happen. I can say to you that those have passed. This will pass. However, the long-term effect on the economy is going to be different than it ever was before. 96-0 vote in the Senate to pass a $2 trillion, sounds wonderful. The problem is that has to be paid back. It's a deficit that we have to get out of somehow. I'm not in government. I'm not going to run for government. I was president of my HOA for 8 years, and that is more than enough government for me. what I'm going to try to do today is first I'm going to go through the two parts. First, what's so special about after repaired value. That's the original intent of this third seminar that I've actually done with Francisco. But I decided it's kind of very, very important to bring on board. Can this be worse than 2008? And where do we go from here? So let me sort of get started. And I'm going to get started very simply with my usual disclaimer. I'm not an attorney, CPA, or realtor, and any information derived or found in this presentation is only to be construed as educational. Always seek the advice of those professionals that are licensed to do that. Second part is the FTC required disclaimer in the sense that there are no averages in real estate investing. And when a student comes to me, a wannabe student, and says to me, what's your average profit, or what does your average student do? How long does it take your average student to get deals? There's truly no average, because a number of my students have gone out and gotten deals very quickly and never told us. Other ones have been in the program for years and still in the program and have had no results whatsoever. Why? I'll talk about that a little later because it's important to me. So what's so special about after repaired value? I said in the little email that you probably got, smoke and mirrors. So first I'm going to talk about the different types, and I'm going to keep this as reasonably short as possible because I want to try and get into some questions. So I have some special things for you. You guys who are attendees are going to get some bonuses that I didn't advertise. So let's talk about, first of all, BPO. It's a broker's price opinion, smoke and mirrors. What it focuses on actually is closed comparable sales. And as a matter of fact, in Rehabbing, he has a menu tab. You can generate your own BPO. Where did the BPO come about? Well, basically what it is a broker's price opinion of what the value of that property is. The bank started that by going to the brokers and saying, look, guys, we don't want to pay appraisers all this money. We're paying them $300 to spend an hour or more, put this report together. We'd rather pay you the money. And of course they said, hey, pay us. And the bank said, well, okay, $45. Sometimes they'd get $75. And for a while back in 2008, 9, and 10, there was rooms full of agents just literally putting together BPOs because they didn't actually have to see the property. All they used is comparable sales that they could get either off from the public record or a service that has closed comparable sales. The next one that comes up is one that, in my opinion only. And any of the things I say here are the opinion of me. They're not Drea, they're not Rehabbing, they're not any of my friends or even Nancy. It's just me speaking out about what I believe. CMAs, what that means is instead of just the BPOs of the highest closed comps, it's comparable market analysis. It very simply includes listings. So what if the listing doesn't close? Well, then it didn't work. But the point of the CMA is to be able to sit down in front of a seller and sell them on the fact that you're the best listing agent for the job. And here's what you think you can do for them. And it becomes the next agent says, I can do better. I have pocket buyers. I have international buyers. I have this. I have that. Just get the listing. And as you will know, if you're a licensed agent, the highest producing agent in any office that's consistent and not a niche market like penthouse condos or whatever, does the most numbers simply by direct dialing. He uses Tom Ferry's method or whatever and a robo-dialer, and boom, that's what he does. Once he gets the listing, he's out of the game. He's on the run to get to the next one. That's what's most important, and that's what works. Appraisal. Now, I always say this to when a realtor says to one of my students or to me, I have an appraisal for $400,000. And my answer is always, I really wish we could force the appraisers to buy the property at that price. By definition, an appraisal is the best estimate for a property in a normal market. We've had a 10-year straight rising real estate market. Coincidentally, it's the same thing in the stock market. So if you're thinking about, well, it should pull back, I'm going to talk about that and how far and just exactly what can happen or not happen. So an appraisal is done by a licensed person who sets up a group of standards, and typically, frankly, they're the highest comps in the neighborhood. And there are very specialized appraisals that, for example, on very expensive homes, they're very, very difficult to put together, and they charge a lot of money for them. Instead of $300, I might charge $3,500 or $5,000. And likelihood is they're worth it because, in fact, if you are selling a property, people who come through, one of the questions they have right off the bat is, did you get an appraisal? And one of the things when I started selling homes after 75 is the thing that annoyed me the most was these people who would come in and, kick the tires and ask dumb questions and take a long time to decide. And look, I'm in the commodity markets. I get answers and I get responses in what at that time was very quick, which was 10 minutes to an hour. Now it's milliseconds. Matter of fact, at Merrill Lynch, when I was there for a short time period, we had the largest single day volume in the New York Stock Exchange. It was 3.5 million shares. Because of that, we had to close down the following day, Wednesday, to be able to let the accountants literally catch up with all the closing. I don't know how many they do now, a billion shares that are shown through the stock exchange. At any rate, what I did, frankly, is I developed a system I call it FSBO Power Selling System. I'm not here to sell anything, but what it was is a round-robin auction program. We'd set it up at the house that we had rehabbed. We didn't know any better. There was no wholesaling when we started because the only other investors were typically firemen who had a couple days off. They buy a house, rehab it. We'd go around the neighborhoods, find them, and then sell them the next house if we wanted. We couldn't rehab it ourselves. That was our way to wholesale. The MLS was, in fact, on a newspaper format. I think it came out once a week. So anyway, what I focused on is I don't like this real estate stuff because I don't like to wait for people to make their mind up. So I created this FSBO power selling system, round-robin auction system, and it made people see what other homeowners were trying to buy the property for, other people coming in, and it just exploded. So typically we could sell in one weekend, but the question always was, did you get an appraisal? And what I did for an appraisal is I did an e-appraisal. I'd go online. There's a number of services. At that time, I was paying $15 to probably $30. And the appraisals, you can just almost pick what you want to get. Some were lower, but most were much higher than what I was asking. And if I wasn't asking enough, I'd raise the price. So appraisals I'm going to say, are they good or bad? I'm not going to say. I'm going to talk about it in a moment. So AVMs, these are automated valuation models. And these have become more prominent because of the iBuyers. They're advertising that we have this system of calculating values. Now, I'm going to go through it in a little detail in a few minutes and show you what they mean. But basically, some mathematical guys came out of college and they said, we can do this. We can tell you exactly what that house is worth. When Zillow started up, I called them one time and I said to them, guys, I'd like to advertise on your website. You don't have any advertising. They said, advertising? Do you think that would work? I said, well, I don't know how it would work, but it worked for me because you don't have anything else on there. They said, let us think about it. They came back to me about 30 days later and they said, yeah, you can advertise. It's $30,000 a month. Well, that shot that. But nonetheless, now revenues for advertising are their substance. That's what they live for. I think they had $700 million from real estate agents and brokers last year. At any rate, the next thing is investor guesses. So they're either for rehabbing, wholesaling, or for income. I'm going to talk about the income, show you how to do an offer estimate in 5 seconds or less. Boom, that's it. It's as good as filling out 10 pages of what ifs. Well, I'll go into that in a moment or so. Anyway, let's look at rehabbing. We as wholesalers, and I'm proud to say it, we as wholesalers very oftentimes make more money than the rehabbers. Most rehabbers do not look for their own properties. They are specifically rehabbers. They're able to handle a couple of properties at a time at the most, or if they have a lot of things going on, they have to be constant buyers because they have crews. If they let them go, they'll go with somebody else. So they're forced into a position of kind of being constant buyers. When a student comes to me and he says, I want to be a rehabber, I say, great, but you have to learn to wholesale first so you have a cash flow. Then what you need to do is learn how to sell the property using a FSBO system. For example, on an open house, 98% of the people say that they don't work and they don't, unless you get lucky. But a FSBO power selling sale, these people are coming because they think that property is going to be liquidated. When they get in there, they find out it's been rehabbed and the buyers come forward because they want to live in it. But here's the trick. What you do is instead of having to do 5 deals a year, wait for your money to come out to do the next one and so on. When you have the FSBO sale and you sell the property the first or second weekend, you keep selling the property, except that everybody that comes in, you say to them, is there a problem? And they say, well, my credit's not good. And your response is, how about if I fix your credit? I'll pay for your credit restoration. That means you're not paying until they close with you. They pay for it, you reimburse it. What you can do is build a pipeline of 30 to 50 buyers, depending on how many homes you have. And before you finish the next house, before you're ready to stick the sign in the front yard and put it up on the internet or whatever, you can call these 50 people, text them or whatever, and they're out there looking at it, bidding against one another, and they can then buy it. That's how you go from 5 to 50 rehabs in a year. Typically, rehabbers' fault And I'm not going to say it's, it's not personal. It's just they want to get the most money they can. They have a big investment in the thing. They have time investment. They have a lot of pressure on them to get it done. And of course, everybody works against them in terms of the city, the people working for them. They don't show up, so on and so forth. And every day that ticks off, they're losing money out of their potential profit. And if the market turns, everything goes bad. So their estimates, their Achilles heel, is the fact that they guess that the highest comparable sale in that neighborhood, our subdivision, our area, they can match by doing a good job. That's not necessarily true, because that buyer that got it could have had mortgage fraud. He could have been crazy to buy the house for that much money. It doesn't matter. That's where they go wrong. In terms of wholesaling, I have this first bonus that I have for you. It's going to talk about exactly what matters in terms of after repaired values. The square footage, bedrooms, baths, all of those things that you're used to are not of substance almost whatsoever. What you have to learn to do is get the property under contract and then figure out all that stuff if you want to. One of the clinks in the armor of the guys in the west coast of Florida, frankly, is they get a property under contract. They put it out to their wholesale list, I'm going to say, who are most of them rehabbers and a few other wholesalers who may resell it again. But they put in a list of repair estimates. And my thing about that has always been, if I buy that property from you and those repair estimates aren't accurate, I'll come back and sue you. And I don't know how many of them have been sued, but I know some of them have been. Why do you think you have to do that? Any wholesaler or rehabber who comes to look at your property is going to do his own estimates of after repaired value and cost. And they're probably, the cost-wise, more accurate than anything you could do because he's actually doing it. Now, investor guesses for income, they're very, very, very simple. And I'm going to show you in just a moment or so exactly how we do them. So which of these methods is best? All right. Here's the first undisclosed or undeclared bonus for you attending. I have a short video, I think it's 10 minutes, and it says determining after repaired value. Now, it doesn't just frankly go into, this is where it's at, so you can go and pick it up. I'm not selling it. You just go there and play the video. Try not to do it now. Wait until afterwards. You probably crash my server if everybody runs out there. But very basically, the video explains a method that I've used that are none of the above, and it works pretty well. But there is a conclusion in this video about how you should do whatever you're going to do and learn to do that if you're going to be a successful investor long term. It's in the video, 10 minutes worth, no sales pitch, no upsells, no nothing to buy. So let's look at these automated valuation systems. Now, I can't exactly estimate how much the iBuyers have paid for these mathematical models, but I'm sure they paid hundreds of thousands, if not millions of dollars to have the guys tweak what they think are all the possible variables, including the hair color of the seller, to determine what the value of that property is. So let's look at some real ones here. Now, for many years, when Zillow was pretty much the only one out there doing their Zestimates, it was a joke. We'd go there and see a $300,000 property and Zillow would have it for $420,000. How? They would take into account the land value, I don't know what, tree value, I don't have any idea what they were doing. But it was a joke. So you could not go to Zillow and say, what do you think it's worth? But here I picked a specific property, and the Zillow estimate is $333,000. Now, they became so successful, they bought out Trulia. Trulia's estimate is $333,210. It's the same AVM software. How did it come out to be $210 difference? It's a round-off error or round-off difference. So here's Realtor.com. $354,000. Now that's the highest of the ones I'm going to show you. Redfin, $334,000. Again, these are all the same properties on the same date by the iBuyers. Spokio, $317,000. I don't know how to say that. Huzui, $247,715, the lowest. So if you're going to say to somebody at your sale, how much is it worth? You could say, I took this out of Realtor.com, $354,000. I'm only asking $335,000. When the highest comp in the neighborhood's probably $325,000. But if you're going to go in there and make a presentation to a seller, you can say, look, these guys use AVMs, very sophisticated modeling system, and it came out to be $247,000. Oh yeah, Realty Track. It's not in the same line. It doesn't matter. $336,000. Average price $322,000, and without the Huzui, $334,790. I actually have a second bonus coming up in a second. I've been working on some new things to come out with that nobody else has had in the real estate industry. And one of which is an iBuyer course. And what I'm going to give you is an introduction to the iBuyer course. I created a PDF. You're getting the first part of that course. You can't have the course. I'm not selling the course. I'm just giving you this. The title is How to Calculate your iBuyer Offer. Here's how you get it. Just go to davedinkel.com/iBuyer. It has what I call vital tips on specific contracting techniques that are unique to what I do and what are unique to what my students should be doing. I don't know if anybody else is using them. I don't watch YouTube videos. I don't know what the other guys do. What I know is that these things have made myself and my students, myself a multimillionaire, my students at least millionaires in most cases. Not all of them, a few of them. But it doesn't matter. We have the highest success rate in the industry, as I've been told by other national gurus. The guys that are out there every day beating the public, frankly, to a pulp, getting their credit cards raised and doing various things. So again, no sales pitch, no upsell, nothing to buy. Take some time and read it, and I guarantee you, you will get plenty out of it if you use it. Okay, so let's talk about the iBuyers. The interesting part about the iBuyers is that they are investors. They're very simply wholesalers. They're buying wholesale, putting together a rehab plan, selling it retail, or lipstick on a pig, light rehab, selling it retail, or buying it to rent it, or getting a mortgage in place, selling it to an end buyer. I mean, they got all these great ideas. And it's been laughable for me for the past year to be every quarter in front of the DREA meetings to follow how is Zillow doing. And man, well, I think in the third quarter, every house that they had purchased, after they sold it, they lost $50-some thousand on each sale. So it cost them $50,000 to do a deal. That's not how you do wholesaling or retailing or lipsticking on a pig or anything else. But big change in the iBuyer market. They stopped doing business. Now, one of the first things that came up is the iBuyers have all associated themselves with different brokerage firms, realtors, brokerage firms, so on and so forth. Why? There's a niche market for people who want convenience in getting out of their home. The mentality of the average realtor is very simply, I'm the best. I'm going to get the highest price. I have the most powerful sales tool in the industry called the MLS. Oh, and by the way, I get paid a commission. And that's all well and good, and that worked for a long time. But along came the iBuyers, and they said, look, what about these people that don't care about the price? They want speed. And that's a foreign concept to most agents. They're used to taking 30, 60, 90, 120 days. Oh, yeah, in the good old days, you put it up and you had 25 offers, 24 of which were screwy offers that didn't have cash to buy it anyway, and one guy that was offering too low. But everybody that called you, you said, I had 24 offers this morning, and all above list price. I hear this and I'd say to myself, hasn't anybody ever said to them, why didn't you take it? Because when I see it sold 60 days later, it was well below the first list price. I'm sure that when you take your license as a realtor, you swear on the Bible you're not allowed to lie. But what I see in the business, unfortunately, is to get a seller to sign a listing agreement, a lot of stuff goes on that shouldn't. Obviously, those are the bad apples in the barrels. I'm going to say to you that I love realtors. They're our biggest buyers for the wholesale properties once they learn what they have to do. So along comes the iBuyers who are associating themselves openly with Keller Williams, Home and Gardens, and so on and so forth. And they own the iBuyers in some cases. When they have an occasional meeting in the office and the guy who's doing the class, I talked about this, the student is saying to him, I got my license, I want to be an investor. He said, you can't be an investor. You cannot be an investor and be licensed agent at the same time. So he says, well, why not? He said, well, it's a conflict of interest. It's morally incorrect. It can't be done. So my question to him to ask the proctor was, is there a statute that says, either in the National Association of Realtors or something, it says you can't be an investor as well as an agent at the same time? And the answer was, well, no, but you can't do that. Morally, you can't give somebody a lower price than you can actually put it on the MLS and get a higher price for. And the question is, can you get a higher price in the amount of time that the seller has? And the worst, most egregious thing I've ever seen is an agent went out to a tax deed pre-sale. Next Thursday is the tax deed sale. Guy's going to lose his house. Can't get out of it. There are ways to stop it, but he didn't know it. Realtor didn't know it. Signs him up, puts it up on the MLS. Of course, didn't sell. Guy lost his home. He could have taken investor offers that would have made him a real chunk of change rather than losing his home to the tax deed sale. If it sold at more than what he owed for taxes and his mortgage, he would have gotten some money back, but that wasn't the case. But he could have done it. In fact, had he done it with an investor, he would have made more money. So the agent got the listing, but that's all he got. I'm not going to go into should he have been sued and stuff like that. It doesn't matter. Here's what I'm getting at. the feedback from agents to their brokers about why can iBuyers do what I want to do? And the responses have been, so you can't, or come on board, I'm already doing it, has been stressful for a lot of the national brokerage firms. So a number of them have cut ties with the iBuyers. But here's what, as you see in front of you, the latest thing that happened, I didn't hear about it until I saw my phone explode, probably the beginning of the week. All iBuyers have stopped doing business. They have forfeited millions of dollars of earnest money deposits because they can't close. They're afraid. They're funding, some of which is borrowed money. And I don't want to pick on Zillow. You know, I'm sure those are really nice guys. They have families and kids, but boy, have they had bad management. They borrowed the money. They're paying interest on the money. While the other iBuyers went out into the corporate world and said, guys, we have this great idea and we want to raise capital and we'll help you make money on your money by cutting you in. Well, these guys have committed the money and are not getting anything on it. So maybe a lot of those said, let me out. So the iBuyer thing has stopped, so I'm stop writing my course. But for you guys, I fund in 39 states, my transactional funding. I get to see things that any other guy in the country probably doesn't see because I fund those deals. I actually close on them. I see both sides, seller, buyer side, and the end buyer side, and the mortgage money coming in or not coming in and things like that. And it's pretty interesting out there because a number of wholesalers connected up directly with iBuyers. And I did an example at the DREA meeting where I showed an iBuyer example. Matter of fact, the one I just went over those numbers, I showed you how they calculated the value they made, the offer they made to the investor. He had a $53,000 net profit going into closing with this iBuyer. He came walking out with a $2,400 net profit. And I showed you how they took advantage of him. And legally, he signed a document that said they could take a 7%, well, actually, they could have taken 10%. I don't know what they called it. It's a commission. Call it anything you want. But then they also subtracted the rehab costs, which they estimated without ever seeing, I understand, he told me they never saw the property. Boy, that was really good of them to re-estimate them. They're out of the business for now. So they're not a factor either for you to sell things to or for you to learn from, except for the fact that I gave you access to that course. So let's talk about, I made this promise. I'm going to show you how to determine the value of a multifamily income property in 5 seconds or less. Caveat to this, it does not work for a single family home in the free PDF download you're going to get. So the caveat to this is it doesn't work for single family homes that are rentals. However, in that PDF, I show you how to calculate the value and the offer to make on a single family home that's being used as a rental. So here's what we're going to look at, and this is very, very important. Gross monthly rental income, what I call GMRI for obvious reasons. I'm going to assume $2,500. That's for 2 units, 3 units, or even 4 units. Where would you get $2,500 for 4 units? In a real bad area or in a very poor area. As a matter of fact, one of my students does 10-unit buildings where he has $3,000 a month gross monthly rental income. It doesn't matter. Don't tell me about expenses, taxes, repair estimate. They do not matter at the moment. This is an initial offer I'm going to show you how to get. You can work it down from there if it needs repairs. The offering price we're going to do equals the GMRI divided by Divisor Factor. If the Divisor Factor is 1%, that's a $250,000 offer price. How did I get 6% cap rate? Because that's approximately equivalent. The average taxes, carrying cost, rehab cost, 7% more, all that stuff that you get are 5% mortgage. It doesn't matter. What you're going to see is gross monthly rental income divided by something less than 1%, it's going to be $350,000. That's a 3% cap rate or 4% cap rate. Is that a good number? If you live in South America or a foreign country where your inflation rate's 25%, it's better to get something on your money than to lose the value of your money. So very oftentimes in economic crises like we will be having overseas, when the United States, has a cold, they have the flu, and now they have a pandemic besides. So a lot of things are going to change internationally. But here's how it is, very simple. If it's a 1% divisor factor, it's $250,000 for that property, 1, 2, 3, 4, 5 units. If I go to a 1.25% divisor factor, my offer is $200,000. That gives me about an 8 or 9% cap rate, which a lot of people, frankly, right now, if you're a landlord, you'd be happy to get if you're in this market looking for rental properties. But let's go one step further. If that divisor factor is 1.5%, $167,000 offer price. Hey, Dave, what does all this mean? I don't know if I put it into the rest of the slides, but in 2008 and 9, on foreclosed properties that were multifamilies, there's two great nightmares that any bank has. Mold, the four-letter word, M-O-L-D, and tenants. Tenants and toilets and liability is their problem, and they don't want them. So their interest in selling multifamilies and commercial properties is high. We consistently bought properties at a 25 to 30% cap rate, 2008, 9, and going into the beginning of 2010. Well, let me show you how we do this. So here you have it. Use a divisor of 1%, 250,000. 1.5%, 160. The difference between a 0.5% divisor factor between a 6 and a 12% cap rate is an $83,000 profit expectation. So what did we do? I've never been a landlord or owned rental properties for more than one day. Typically what we took out at the closing table was equivalent to 2 to 3.5 years, I said, of headaches for the landlords. It's tenants and toilets, and it's liability. I've said this for years. Many of your tenants are going to be more legally savvy than you'll ever be in terms of getting them out. That's what they do. So here in 5 seconds or less, look, divisor factor, boom, divide it. If you don't have it, put it on your iPhone or whatever, Android, divide it out, there's your offer. Now, if the guy comes back to you and says, this is a 6% cap rate, I'm not willing to accept less than $300,000, then you come back to him, you follow up. He's either going to sell it to somebody that doesn't know any better and they're stuck with it, or in fact, you're going to be there the last man or woman standing. So here's what I want to get into. This is what I'm going to talk about totally for the first part of the program. Now what I want to get into is what's going to happen. I mentioned to you briefly that in my history, and I didn't know any better, I just went through it. I've been through these catastrophic things like market crashes, the shuttle disaster, the market dropped. Well, here's a good example. The market dropped at that time 800 points, which was catastrophic. I owned my own brokerage firm at that time. You don't understand this because you're on the other side of the marketplace. But if you own a brokerage firm and when the shuttle blew up and the market started down, everybody in my office, I had about 30 employees that were stockbrokers. They came running to me and said, what do we do? And I said, well, I know what I'm going to do. I took a pile of, I'm going to say, I don't know, I guess it was around 500 sell tickets. We had red ones for sell and blue ones for buy tickets. So as fast as I could write orders and as fast as my wire clerk could put in the orders, I was selling 1,000 shares of everything, GM, IBM, anything that was above $100, selling thousands of shares. Now, what I knew, because I owned the brokerage firm, is if I bought those same shares back before the closing date, which at that time I think was 5 days later, I didn't have to put any money up. Has the public ever been able to do that? I don't think so. Has the public been able to do a short sale without an uptick? No. But if you own your own brokerage firm, that's standard operating practice. When the market is falling and the public is panicked, it falls so quickly because the only buyers are the guys that have the money, but they don't have to spend it. What they do is they rally the market and set off the now what are automated systems, and they rally the market the next day, and they sell into the rallies. So they buy into the decline, sell into the rallies, which the average person, it's beyond their expectation of how to do that, but they don't have to put money up. So what happened? For the next 2 days, I wrote buy tickets without knowing what I was buying back at what price. And at the end of the 4 or 5 days, when all of the trades came back because they were that backlog, we made multi-million dollars, and we did it with no money. So how did we do that? We weren't in the herd. We did counter to what everybody else was doing, and that's a point I'm making. And this little don't panic, this is the most obnoxious thing I've ever seen in my life. What is the expectation that you'll have to have? What are you going to do with all this toilet paper? All the jokes come out about, the mother put all her 90 rolls of TP in the bathtub and one of the kids came in, turned on the water. It doesn't matter. I saw another picture that showed stacks of toilet papers and it said, here's your proof of funds. All jokes aside, we're facing the worst crisis, I believe, the United States has ever faced. And it's not this short-term thing that we will get through. It's the long-term after effects, which will last for years. I'm telling you that for a reason, and the reason is don't get caught up in feeling sorry for yourself and everybody else. You have to take care of yourself. I went to a program called CERT, Civilian Emergency Rescue Training, for people that are non-firemen and non-medics and so on and so forth, civilians. The idea was we have a catastrophe, like a hurricane. The search people come forward with their yellow helmets and their vests and everything else, and they sort the people out by injuries, and they do CPR if they have to, and they fight fires. And, they do those things to help the community. However, the first thing we learned in the search training was take care of yourself first before you take care of anybody else, or you won't be able to take care of anybody else. And I say this to you guys, look, the biggest risk in our society is not what you're seeing. The biggest risk in our society is social unrest. If people get into a situation where they panic and they start to literally go door to door, you hear the survivalists say, look, I've got 8,000 rounds of 9mm, and I got my M14, and I got all that stuff. There's plenty of people out there with a lot bigger guns, no matter what you think you have. I've been through in the 70s when gas prices, went berserk up to like $4 or $5. I remember looking at a gas pump where I bought one of my motorcycles. I always bought gas 19 cents. I looked at the sign, it said 39 cents. And I said, I'll buy it, but I'm never buying gas again above 39 cents. Well, because that didn't last until my tank ran out. It never was that price again. But if you want to be a survivalist and stick your head in the sand, you're welcome to do that. But the reality is, for every 10,000 civilians, the number of police vary from minimum of about 13, I just looked at the numbers today, to a maximum of about 50 for any community. So if you're saying to yourself, I'm going to not worry about this because the police will take care of me, there's not enough police to take care of everybody else. You saw that in Louisiana when the hurricane came in and blew through. Some of the police abandoned their posts. There wasn't enough police. So what America has to do is come together and get through it together. And I'll give you the best example that you personally are involved in already. You have FDIC insurance on your bank account, and your belief is that it's insured, I don't know what it's insured to now, $250,000 or $300,000, whatever it is. Your stocks are insured by what's called SIPC. SIPC, Security Investors Protection Corporation. Neither of those, FDIC has been bankrupt for probably 20 years. And SIPC, I don't know how much money it has in, but doesn't have $10 trillion in it that makes up for market value. So the only thing that happens when a bank fails, or a savings and loan, is the Fed comes in and says to the next closest bank in the region, you're taking over ABC Bank's assets and liabilities, and we'll help you through that. They don't give them money. They just help them through that by giving them credits and stuff. One of the most dangerous things I ever saw, well, two of them. On 60 Minutes on Sunday, they talked to two separate doctors in two separate hospitals, and they said to both, they posed the question, you have a 22-year-old and you have a 65-year-old in front of you. They need a ventilator. You have one ventilator. Who would you choose? Both the doctors said the 22-year-old, which I didn't expect that. And it was real sock in the gut for me because I'm the one that's not going to get the ventilator if that happens. That's why we're doing these things remote. That's why last time I didn't know that's what was going to happen. But when I said to Jim, I'm not coming to the meeting, let's do it remote, he said, great idea. That's the reality of the real world now. What I'm saying to you is this. If you allow yourself to be controlled by panic and by the herd mentality, you're going to be just trampled. That's what it comes down to. So here's the first thing I got early this week. I was closing a property in Minnesota. The gal that was the closing person, was kind of slow in responding and stuff like that. Suddenly I had an email back from her, I think Tuesday, and she says, all closing agents will be shutting down at midnight according to the Federal Reserve. No transactions will take place in the United States after that. And I sat here and I said to myself, pretty hard to believe, because we are the financial mainspring, so to speak, of a car that's on its last leg right now. It's having engine problems, but we're holding it up and we're moving forward. So now somebody is saying to me that, in fact, the Fed did that. So what I did is I found the Treasury, and this is what it says. What I did here is I went a step further and I blew it up for you so you can see it. And it very simply says, vital workers need to maintain, you can read it, but financial transaction services such as payment, clearing, and settlement services, wholesale funding. That doesn't necessarily mean real estate wholesale funding, but it does mean capital market activities, which is real estate, and the financial transactions and services that go with it. So this hysteria that she was getting into and just overcame her. I don't know if she was just too busy or whatever was happening. Let's get into the real nitty-gritty. Kind of been probably boring some of you to tears so far, but let's talk about what's ahead for the real estate market and for real estate investors, frankly. When the mortgage meltdown came in 2008, values dropped almost 50%. And I'm going to say 18 to 24 months, depending on what you're trying to do or or not do. Multifamily properties, I mentioned this before, and I did put it in here. Day when you just really wanted something to buy, you get it at 20% and sell it at 10 or 12. But cap rates were up to 30%. People would come into the office who wanted to be investors, and they would say to me, Dave, I want to create financial wealth. I want to be a landlord. I said, great. What interest rate are you willing to accept? Geez, I'd take 12%. I'd be overwhelmed with 15. Now, remember I showed you earlier what a 0.5% difference made? What I did is I'd go out and I'd find something at 18 or 20% and show it to them at 15, and they would drop dead thankful. I don't have to say to you, we made an awful lot of money. Those properties that they bought, if they held them, I'm going to say at least doubled and more likely tripled in value. I say they got their more than net worth out of it. The interesting part is the average landlord only lasts 3.5 years. I had mentioned that to Francisco one time, and he said, I can put something into REFX in some of the searches where I can look for landlords who have been in the properties over a certain amount of time. So one of the stacked filters I'm going to mention briefly later, that's one of the filters. You can actually go looking for multifamily properties where the landlords have been in them for, I think, more than 4 years as a criteria. One of the other things that happens is very oftentimes a guy goes out, buys a duplex, lives in half of it, and he buys another duplex. And by the time he's ready to retire, he's built up, maybe 20 or 30 properties. Then he has to sell them. And the mistake most of those guys make is they try to move them all at once. And what happens is they take what's called a haircut, which means substantially lower than selling them one at a time, because they don't know how to market the properties. It doesn't matter. I'm not getting into whether they're doing it right or wrong. If they're happy, that's all that matters. Let's talk about what's going to happen this time. I get a feeling for this because in the last 5 days, some very, very important things have happened. One of which is transactions. A to B and B to C transactions have at least, I'm going to say tripled, may have gone up 4 times. This morning, the first thing I had to do was send in funds, 7 wholesale, same day, double closings. What happened to them? One of them didn't close. Why? The end buyer said, I'm canceling because of the coronavirus. Well, the thought process is if this gets worse, then values are going to go down. But here's the other thing that I'm seeing. Money is moving. If you ask me, I'm not sure why I'm telling you this because everybody's going to move there, but out of 39 states, what is the most active state in terms of wholesale purchases and resales? Same day, double closings. Georgia. Georgia accounts for an awful lot of my same-day double closings. So I got a call a couple days ago from a realtor broker, and he says, here's who I am, been in the business, tried to be an investor, couldn't work. I really came in the business to be an investor, but I just didn't understand how it works. So I've been an agent, and I became a broker. And now one of my clients is Num. I said, he said, do you know them? I said, no, I don't know who Num is. Well, they closed more than 5,000 properties last year. Okay, so Num is a whale buyer. I call them because they're continuous, but they don't buy from me. I'm not in Georgia. I don't even know what states they're in. Didn't matter. What he does is he's the intermediate that goes out and finds investor deals, and he then resells them. He doesn't resell them. He acts as a broker. He gets a whopping 1.5% commission. But again, remember, they do volume. So he's saying to me, this guy is going to make this much money and stuff like that. And I said, yeah, are they going to close? He said, well, let me tell you what's going on. There are at least 1 and possibly 2 consortiums of money people. What's money people? Well, there are money enough people to put together $1 trillion. They've gone to the hedge funds. This is a hedge fund. They've said to this one, you have $1 billion to spend. I want you to spend it as fast as you can. So all of the closings that they had postponed now had to be closed this week. Matter of fact, I'm closing them tomorrow. So what's happened here? The big guys realize that real estate's not going to go away. There's only so much land. There's only so much real estate, and it's a renewable resource. People are always going to need places to live, and you can go through these gymnastics but it's too expensive to afford a mortgage and values are too high. Well, you're living in another world, because those things are here and people are doing it. One of the things that scares me about this $2 trillion package that the government passed, and I don't know what's going to happen. Trump says that anyone that goes on unemployment is going to get 4 months of his full salary from before. My first thought is I need to fire my employees so they can get the same money and I don't have to pay it. What I see happening is people are going to stay on unemployment even if they can go back to their job. There's no incentive to go to work. So I don't know exactly if this throw a lot of money at it and see if it works is really the right answer. So money is moving and the real estate market is fluctuating, but it will be over. And I say it's the greatest opportunity since 2008 to make your fortune in real estate if you're ready. What does it take to be ready? But I'm going to talk about what else is happening first. I had mentioned to you already the iBuyers are out. Well, the hard money lenders are shutting down. Why? Because they're afraid. They're afraid if they put money into what's going on here, that the value of the property will go down faster. It's not just the local hard money lenders that, brag about it's my own money. I'll approve anybody. I have the lowest rates. Whatever his rate is, I'm lower. It's not those guys. They're doing it, but they're more afraid than the big guys. The big guys are saying, we're going to close now, not this week. We're going to close April 17th is one of the dates I'm getting a lot of. I don't even know what April 17th is. Looks like it's a Friday. Why April 17th? It has no reason except for the fact that they want to see what's going to happen. What's going to happen is there's going to be more cases, there's going to be more deaths, and it's not going to be over because we couldn't get tested for so long. I watch the stats every day to see how they're going. At first they, kind of doubled and then sort of tripled. Now they're in geometric terms. I know this is serious, and I know it's going to get more serious before it gets better, but it will pass. So for the hard money lenders, you have to go out there and ask ahead of time, are you going to close? Because when you get an end buyer set up to take your wholesale transaction, he told you he's a cash buyer, and then he tells you, yeah, well, I'm cash because my hard money lender is putting a cash in. He's not a cash buyer. And if you have another guy that actually has his own cash and shows you his personal proof of funds, his own bank account with his own name on it, then in fact, you can do it. Go forward with it because he's going to close. If you have to take a little less on the money, take less money, be sure you're going to close. The whale buyers are getting scared. Why? Because everybody's getting scared. It's herd mentality. When they see prices come down at all, they'll jump all over them. Is this something that can be restrained or stopped? No. What you have to do, very frankly, is just build a bigger buyers list while you have the time. Go in there and call these guys and ask them. I get probably 15 phone calls a day or emails combined. They say to me, are you still closing transactional funding? My answer is yes, of course. Tell me what the deal is. So the $1 trillion is coming into the market, but from where? Interestingly enough, I could see the money trail because it didn't come in from the stock market because the stock market's bouncing around. What it came in from is the commercial paper market, which is why the Fed Reserve Chairman said something to the effect of they had to insert $1 trillion into the commercial paper market to give it liquidity. What's the commercial paper market? Those are short-term borrowings that are the backbone of your money market fund. So when you're putting money into your Merrill Lynch money market fund and they say to you, it will never be less than $1, that's true. Now, do they take losses on the paper in there? Yes, every day. Well, how do they keep it $1? Because they take it out of the percentage return they give you. So they've taken their money out of that commercial paper market, which means the Fed's going to have to put it in. Now, the second thing, besides the doctors giving the 22-year-olds the ventilator, the second thing is the Fed Reserve. They had the Fed Reserve chairman for, 14th district. And his answer for this whole thing is very simple. He said, we'll print more money. He said, we don't even have to print it. All we do is add a zero to the account for the bank, or 2 zeros, or 3 zeros, whatever we need. It's like endless. That's true. It can be because it's an electronic entry. But the reality is that money has to come back sometime and somehow. Are the only things that are going to be of value are things like real property. Real property is the definition of real estate. If you're saying to me, I'm a gold bug, I've been hoarding gold since 3 weeks ago or 3 years ago or 5 years ago, I believe those survivalist things. Matter of fact, one of the homes I own has a nuclear blast shelter attached to it. 3-foot walls, it's 20 by 22 feet, it's about 14 foot high, has a 4-foot solid concrete roof, a steel door, self-contained inside. I didn't want it. I just bought it. It was put up during a Cuban Missile Crisis. So is that a safe room? That's what it is now. That isn't what it was before. If we had a nuclear blast, what they prepared us for in school is you get under your desk. There's no desks. This thing is going to wipe out everybody. So these people believed when they built the nuclear blast shelter that a 4-foot concrete buffer could keep out the blast. I don't think it's going to happen. How bad or good could it get? I don't know. In all of my years in being in the stock and commodity markets, I was the go-to guy in each office I was in because I was the trader. And my value is when the news comes out, don't believe it. Do whatever the opposite of the news is after the initial wave of craziness is over. And that made me a lot of money for my clients and a lot of commissions for me. But how bad could it get? We're not going to have civil unrest. We will get out of this. The only issue is how long. How good can it get? Frankly, it's up to you. who are going to be the biggest winners and losers? This has not changed in the history of mankind. The bold are going to be the winners. The ones who do not have their heads in the ground, the ones who say, I'm not afraid of fear, I'm going to go ahead and do something. So let's talk about something. I have mentor applications. People send those in for the program, and I read those. One of the questions is, what is your greatest fear? And typically the greatest fear is losing all my money, legalities, bleeding to death in a property, all of which are very controllable. For example, in losing money in a property, well, don't go into it if you think you can lose money. Wholesale it. Don't close on it if you can't find an end buyer. There's always an answer, a solution to whatever the problem is. And the simplest solution is go on to the next one. There are more than you can ever count out there at any given time. And here's what's going to happen too. The timid extend their minds to the nth degree about what if this? Well, if that happened, what if this? And what if that? And it absolutely drives me crazy because 99.9% of the time it never happens. And what have you done? Nothing. You've systematized your mind to control your thoughts to save you from something that isn't going to happen. So let's talk about what if you lose money on a transaction. Your limit of liability as a buyer is what's in your earnest money deposit. You know, Walt Disney, you hear me say this, went bankrupt 4 times. Mouse saved him. But your earnest money deposit, you can borrow it if you have to get back in the market. It's not like it's forever. I'm going to say bothered by it because every one of you listening has a certain brilliance in yourself, and you can bring it out if you're not afraid of doing it. And it's up to you. It's really and truly up to you to take charge of your own life, to overcome your subconscious that says, I'm going to save you from everything around you, therefore don't do anything with your life. And you don't. So what's your risk by jumping in? Let's talk about landlords. All right, so let's say that you are a landlord and buy rental properties. Interest rates in the bond market, which is what you have. You have a property instead of a bond, and you have an interest rate income from that property. If the value of the bond goes down, your interest rate goes up. It's an inverse relationship. So if you go into a property and you buy it at a 9% cap rate and you can't raise the rents, the neighborhood's deteriorating or something's going on, the value of your property declines. The new guy coming in is going to buy that at a 12% cap rate, let's say. What's the difference? That's your loss of equity. So if you're a landlord or you want to be a landlord and you're coming in now, you should buy distressed properties that you can put money into and significantly increase what would be the rental income, especially if you have no tenants. So look for distressed properties rather than moving money into things that are currently just generating funds. Here's the other risk. So you're a landlord and you have 14 people in your multifamily property. 13 of them lost their jobs last week, and the 14th one is going to lose his this week. What do you say to them? Guys, I can't help you. I have this giant mortgage. So now you have 14 vagrants living in your property. Can you throw them out? Well, sure. Who are you going to get in? Nobody else has money to come in. So your risk as landlords is substantial compared to rehabbers, for example. You know, rehabbers have control in most cases over what they purchase it for, how much money they put into it, and what price they can get out of it. Now, I say that tongue in cheek because if your end buyer is a conventional borrower, which in most cases they are, you're open to what the bank's going to do. I can guarantee you that the Fed is going to make sure that there is a lot of money out there for conventional buyers. So there is an opportunity. I don't know how soon it's going to happen, but there is an opportunity for people who are going to be doing rehabs to make connections with not private money, but mortgage brokers who have available to truly have available to them multi-sources of income. I used to have a mortgage brokerage company, and I would say to people, I signed up with 57 banks or whatever the number was. I did, but I only used the one that gave us the best deal on our side at the time. Might have been a total of 3. So you have to go with somebody that really actually is doing a lot of mortgages, is connected, and knows how to get people qualified, frankly. Finally, wholesalers. The biggest risk you have in jumping in is your earnest money deposit. So in terms of risk of jumping in, wholesaling has the lowest risk of the other two and frankly requires virtually no money. And I hear this all the time. Dave, I see you do those deal talks at 3 all the time. And, you know, some of those guys put up as much as $1,000 and some of them put up $30,000. And as I said to you, oftentimes they don't put up any money. But if you have to put up $1,000 and you don't have it, friends and family members, when you show them the deal, make pitch. I mentioned to you that what I looked for was safe money to get under my wing, so to speak. In our mentoring program, I have a course called Raising Private Money. and I have 2 PowerPoint presentations in there. One of them is for safe money, and one of them is for Keogh and IRA and deferred are absolutely free, and so on and so forth. Don't want to get into those. But they're PowerPoint presentations, so you can put your information in it, make a presentation either by flip chart or by computer. They each have 30 questions that you wouldn't want to have asked to you without the answers, and your probably clients that have the money wouldn't ask you because they wouldn't want to hurt your feelings, but they're right there and you answer them. The first time one of my students used it after I'd put it out for about 3 weeks, he raised $10 million. What it did for him is it took his career from zero to infinite because he had $10 million to do rehabs with, and he split the profits with those people 50-50. No money in the transactions at all. So you have to think outside the normal box of what you can do and how to do it, and just try it. Too many times somebody will say to me, well, what do I say to the seller when I sit down in front of them? It's one of my frequently asked questions that somebody sent in to me. What do you say? What is it you actually say to them? And I answer them back, hi, my name's Dave Dinkel. That's what I say to them. That's how it starts. And while I don't want to go in there and say something, I'll lose the deal. You don't have a deal. You have to fail forward in life, and real estate investing is no different, frankly. What should you be doing right now to take advantage of the situation? First thing you need to do is stack your filters to find motivated sellers. I mentioned in Rehabbing that they have filters and they have multiple types of filters. So pre-foreclosure, tax deed pre-sales. Actually, if you get right down into it, I hated in college statistics. I didn't like them at all. Now I love them because I understand why they're valuable. Especially with my students, I can tell what they're doing wrong by the statistics they come back with for me. I looked at the number of combinations and permutations in Rehabbing for filters. There was over 10 million. Now, how many do you actually ever need? In each one of the filters that you're looking at for pre-foreclosure, tax deed pre-sales, probates, equity, ownership, any number of things, you need about 3 to 5. If you don't have 3 to 5, if you have more, one of my students came up with 23 filters for REOs and came to me and said there's only one REO in Broward County. There was like 3,000 of them at the time. Why? Because he eliminated all the possibilities. Our approach to getting deals is a shotgun approach. This old adage about I have a rifle approach. If these people qualify for these circumstances, they have to sell their home. That's true, except for the fact that they don't have to sell it when you want to buy it. Their heads in the sand or whatever else, they're just not going to do it when you need it. We take a shotgun approach, and I'll show you why that matters and what the bottom line is on it in a second. You have to continue to make offers. If you're not making offers, you're not going to make any money. It's that simple. And if you're saying to yourself, well, I can't make offers because I don't have a contract. Okay, I have an announcement, a commitment that I'm going to make to the guys who are at least on this seminar. So you have to make offers, and you have to overcome the hurdles to get to making the offers. Well, Dave, I don't know if I need an LLC. Do I need a sub-S corp? Do I do it in my own name? Do a Nevada limited partnership? Stop it. Just stop it. Make it in your own name to start with until you make some money, and then go to an LLC that your accountant says should be done as a sub-S corp for IRS purposes. That's it. Now, move forward. I talked to an accountant was having a meeting for selling his stuff at one of the clubs I was with before. And I said, you're talking about things that could never happen in life. He said, oh yeah, that's what I do. People buy by greed or fear. And I really stress the fear factor. That's why I buy my course. I know that 99% of this stuff will never happen. But if I told them that, I wouldn't sell one course. So keep your eyes open about why you're buying something or why you're not buying it. The money is in the follow-up. You've heard me say this. I'm going to say it again. As a matter of fact, one of my students came to me and said, I followed up on this property and it looks like it's going to be $200,000 profit probably or more. And it took me 2.5 years. I think I said this in the last seminar we had or whatever, but actually in time it took her about 4 hours. But she stayed in touch with that seller. It was a probate. That's why it took so long. If you're persistent, you don't give up, and you find out the reason why you're not doing deals, you have to be successful. Bottom line. So let's talk about the age-old question. Should you be licensed, which means do you want to be a realtor? More and more agents are getting it. They work for tips. I know I don't want to make you feel bad, guys, but 6%, if you get 6% and you don't have to split it with anybody, is not enough to sustain a substantial living or to ever scale it. You can't make more than 300 phone calls a day yourself. I don't care how good you are at it. And if you can do 180 properties a year, God bless you, but you're still making less than a wholesaler who has no money in the transactions and lives a different lifestyle. How are they doing? This is a great question. The ones who get it are doing very well. And what I'm seeing is some of the guys who have been in the business a long time, they're brokers, have an attitude that I know everything about real estate. I'm a broker, here's all the laws. And then they see people all around them doing investor deals as agents. They start to do them, and they get an attitude that is ungodly bad. They just had one where they canceled the transaction and went directly around the investor who brought them the deal to the end buyer. That's bad form, and it's going to cost them in the long run. The real estate investing community is a small community, and what I call moccasin mouth spreads pretty quickly. But all in all, they're not doing badly. To get the full story on what to do, here's another place to go, davedinkel.com, hybridism. Now, I'm going to show you these again, so if you didn't write it down, don't worry too much about it. But as a licensed broker or agent, don't let this happen to you. 99% of the agents and brokers out there don't get it because they don't think you can do it when in fact the other 1% are doing it. I coined the word hybridism, and that's the answer in making a substantial and sustained living as a realtor. So let's look at the ingredients. People are coming to you, hopefully, often and saying, I'm an investor, I'm a cash buyer, I can close quickly. All of the things that you want as a buyer. How many of them are real? I don't know. 1%. It doesn't matter. You put them on a buyer's list. Now you have a buyer's list. And now you look for clients that fit the profile of needing convenience. You're not going to buy every one of the properties, charge 6%, then try and resell it into a retail market. It has to need some component of speed, timing, or inconvenience on the seller side. So here's what happens when I meet with students who are not succeeding. One of my things that I try and do for students, for the ones who are not doing deals, is I meet with them one-on-one, face-to-face, tell me exactly what's happening. This is very, very important because Jim does the same thing. Jim's an accountability partner. I am. Dan is. Bijou is. And the feedback I get from Bijou and Jim very oftentimes is the student comes in and what I get is this. Okay, so what I say is let me talk to him. Bring him in and let me sit down and talk to him. By the way, this poor guy has a chipped lip. So Nan hated this. I got this at a garage sale and I just loved it. And I still have kept that thing for years. But here's what I do. I sit down with those same students and I say, okay, tell me what's going on. And inevitably, almost every one of them starts out with, well, first of all, I'm not making any offers. Then they go into a long chain of events about the world got in front of me, my life got in front of me, things like that. I understand. Stuff happens. But if you're not making offers, don't complain about it doesn't work. What is it? When we go into the mentoring program, the concept is, and I stress it, we're going to do to begin with the fastest, most inexpensive way for you to get deals. If you do it properly, it will work for you. It's tedious in terms of you get a lot of rejection. A lot of rejection. So when I had to ride my bike to work to go to Goody's Shoes for 5 miles, whether it was raining or not, I still made the trip. Why? Because I needed the money. If you need the money, take the rejection and know that it's part of what's happening. Some people say, well, I look at it as they're not rejecting me, they're rejecting the offer, but most people don't take it that way. They take it personally. I have scripts for you to overcome that. I have everything you need. So inevitably, as I talk to these students, and I worked with 3 of them last week, all 3 of them, which may be on this call, I said to them before they left, here's an idea for you. Very special for you that I know works very quickly if you do it. What I want you to do is walk out of here, go straight home, make a business plan of exactly how you're going to do it. Tell me step 1, step 2, step 3, all of which is in their materials. But I say to you, just do it for me. And what happens? Crickets. All I hear is crickets. I don't hear anything. They don't do anything. So what's the difference with them and the students who exploded, who in their 3rd or 4th year are netting 7 figures? Only their attitude. The 7-figure guys do not have a higher mentality in every case. The guys who are failures are brilliant guys. I took them into the program because I saw in them very special things, but they don't use them. And I can't help them. And unless you help yourself, it's not going to happen for you in anything you do. The other question, where do I go for the fastest deals? By the time you know where the deals are, it's history. So the answer is very swift and very simple. It's make offers and be persistent and don't give up. That's it. I'm saying to you, guys, this is really rather simple. I could be dancing around the fire here saying, I'm going to stroke this fire because you're in trouble and it's going to get worse. No, it's going to get to be what you want it to be because of what you do with yourself and the people around you. Here's my announcement. No one knows about this. Nan is the only one because she proofreads my stuff. I always leave a little mistake for her to find. Look, I've always strived to change people's lives. The thing that I know best, I don't teach chemical engineering. I don't teach stock trading anymore to show you how to, do gold trading. I have been a very, very successful real estate investor. And now I've been involved in over 7,000 transactions. What does that mean to guys coming in? Well, because of internet marketing and social media and the fact that I'm not 22 or 25 or 31 or something like that, I'm the Rodney Dangerfield of the industry. Nobody cares much. Doesn't matter to me. I'm just there trying to help you guys. So what happens? When the stuff hits the fan, then everybody comes to me and says, how do I get out of this one? And my answer is simple and swift because I've seen it before. So what my contribution is, what I'm trying to do to resolve in the best way I can the COVID-19 issue is stopping the uncertainty of no longer having an income. Now, I have to say, with the government giving you 4 months worth of your regular salary, you have plenty of time on your hands to do something else. Well, here it is. I'm going to set it up. Takes my breath away. I'm best suited for my knowledge, and I can convey that to you guys through a home study series of videos and webinars. Notice the word free. I can't do any better than that. I'm not going to pay you to do them. But what I'm trying to do is bring you to a tipping point of getting you to actually doing something, the biggest part of which is overcoming any fear you have. Again, I'm committing to do a series, these seminars, how to get started in real estate investing. How many can I do and how often? I don't know yet. It depends on the interest. Because frankly, if there's not enough people interested and you're wallowing in self-pity about you can't do it, I don't want to do it. Some people, I'm going to say this frankly because it hit me like a 2x4. Somebody that wants to come in and do some things with me said to me, you understand that some people are untrainable. And I said, I just never thought of it that way. Because that's not what I am, but that's what some people are. They don't have an initiative or a back to the wall or a motive to have to do something. Well, now maybe you do. And if you don't, real estate investing is not for you. It's hard work, and not everybody succeeds, but you all can if you strive to do it. All right, so starting next week, I'm going to have a continuing stream of webinars specifically designed for wannabe investors to get started. Here's what I need from you. If you want to contribute and be part of it, I need your input on what topics you want me to cover. The topics I'm going to start to use are ones that I hear the most on applications for the mentoring program. If you are in a situation where, and a lot of people are in this situation and don't know it yet, you become unemployed, but you don't know you're not going to be able to go back to your job, you better start thinking of a career change. And the one that would be best for you, frankly, would be real estate investing. And I'm not pitching to the sky here to say you can make a lot of money. Depends on your effort. The more effort you put in, the more you'll get out of it. And it can be a career change. I've said this for years. If you're 45 years or older, you're virtually unemployable. If you work in a business that requires international transactions, and you go out of business because of international markets like we have now, somebody else can step in and do your job. You're virtually unemployable. If you don't believe me, great. If you have a job to go back to, great. Person that lives in the home next door to me has one of the largest stores in Epcot, International, whatever it is. He owns it. He's owned it for over 20 years. He was out fixing his water sprinkler when I was getting my recycle can out yesterday, and I said, how's it going? He says, well, Disney World's not going to be opening for at least 3 months, maybe longer. And I said, well, man. Well, he said, the bad part is I've lost all my staff. I said, what do you mean you lost your staff? He said, well, one of Disney's requirements for that franchise or whatever is that the employees be from the native country. I don't want to tell you what his native country is. You'll know who he is. But they all went back. Now they can't even get back. I said, okay, so what are you going to do? He said, I don't know. We're staying in the house, going out twice a week for food, and that's it. Food meaning Publix. He went out to the special Publix, 7 to 8 o'clock for seniors, 150 people outside, didn't have enough carts, and people were fighting for stuff. We went a few hours later, didn't know about the special opening. There was virtually nobody in the store. So if you go with a mob, you're going to get trampled. All right, I need your greatest fears and anxieties. What do you personally need to get started in investing? You personally. And what are you going to do to show that to me? All right, first of all, this is not a coaching or mentoring program. I'm not going to be telling you what to buy or sell if you come to me with a property to look at. The success of this experimental program depends on your input. I can do it without you, but I want you to be satisfied with what you need to take the leap of faith to get you started. It doesn't seem to interest enough people, I won't do it, very simply. Next choice is up to you. You have your choice of destiny. Follow the herd or become a leader. I'm scheduling the next quick start April 16th and 17th. It's going to be telephonically. I'm going to start sitting down with students on a weekly basis or as often as I have to get them started and starting to make more money. And the other thing I'm going to give you is to recap this so you can have it in front of you is what I gave you before is the bonuses, the ARV, the iBuyers, the hybridism, and the other thing I'm going to give you is the sign up. If you want to help with the rescue plan, very simply, what you have to do is send me an email. blogdavedinkel@gmail and tell me what you want to see in the program, and I'll take care of it from there. Kind of I'm going to say in closing because that's what I'm going to wrap it up now. So here's what I think is going to happen. We're going to have ups and downs in the marketplace, the real estate, the economy, and the stock market, and you're going to have to live with them. You have no choice, and you can't change the market. You can only change the way you react to it. Build your buyers list and focus on wholesaling. Your buyers list is the most important thing that you have ever as a real estate investor. Ups and downs will present opportunities. You have to be bold and further shift the wealth of the country from the haves versus the have-nots where it is now. And the only way to do that is to work at doing it, not through social programs. Anyone willing to overcome whatever fears they're harboring and take action will be rewarded, but you have to have effort and persistence. What choice can you make to change your life forever? You have to make the choice to change your life forever. Your life is the summation of choices you've made, good, bad, and ugly. Like it or not, when you say the other people did this to me, you did it to yourself when you got involved with the other people. Get uninvolved and take care of yourself first. I know it's late, but let's try and take some questions.
Okay, perfect. More than questions, we have some statements here. Thank you, Dave. You're the best. Why doesn't Dave do transactional funding for the remaining 11 states?
Very simply, they have excruciating requirements for licensing, and I don't need them.
There's a question here that I don't think is related to the webinar, but it says how to negotiate violations and liens of the property. Please help me. I think probably this is a topic of that you want to use in the future.
We can use it in the future, but I'm going to give you a really serious clue to it. There are some closing agents who are happy to negotiate liens for you. You need to find those closing agents and let them do your closings. They're very proficient at doing it. But what I tell my students typically is you sashay on down to the building department, typically is who has the code violations, or whoever in the city or county handles them, and you say to the girl or woman behind the desk, I'm thinking about buying this property for myself and I think I have a problem. Can you tell me about whether it has code violations and what I can do to solve them? And the kinder you are, don't take them any gifts, the better the response you're going to get. You go down there and badger them like you're the last guy in the world that does everything and you're Batman and you need Robin, not going to happen. So those things can be negotiated if they're not violations where there's safety issues substantially. Two choices, do it yourself or have your closing agent make sure they do it before you put the closing deal with them, your closing. Okay, another one?
What do we need to do to let you know what we want to get into the program?
Fill out an application for me. Go to the website, fill out an application.
He's referring to the program that you want to do online.
Oh, the upcoming series?
Yes.
Well, I'm sure we're going to advertise. All you have to do is click in like you reserved for this one. Very simply.
Okay. We will send you an email and let you know. That's the answer. How is this still a good market for wholesaling?
Okay, that's a question I've gotten for the last 12 years. Can you wholesale in this market? We've wholesaled in this market for longer than that, whether the market's going up or down. 2008 mortgage meltdown was not the first decline we'd been through. Nan and I had been through 2 serious market declines before that, and we just kept wholesaling. The key is have a buyer's list. That's what you need. I've had people say to me, Dave, you told me to come in 6 years ago, and I didn't believe you could wholesale in this market. And we're still wholesaling, and they finally came in. I once had a partner in internet marketing, and I said to him, listen, speed is of the essence. I need us to make choices, whether they're right or wrong, move forward, fix it, move forward. He said to me, why is everything so important? My culture doesn't care about getting in places on time. We take a nap in the afternoon. I said, well, look, great. I want you to retain your culture. But let me give you an example. You said to me, I want to make $1 million a year. If there's 250 working days in a year, that's $4,000 a day. So every day it takes you to do something that you can do in an hour cost you $4,000 more. Do you get it? He still didn't get it, and I had to get a new partner to do the stuff for me. But it's at least costing you $1,000 a day not to make a decision to try it. You're losing money by not doing something. I shouldn't get so excited about these.
I have another question, but I think I know the answer, but I'm going to say to you. So in your opinion, do you think the impact of the property value will be worse than 2008 or not as bad?
Not nearly as bad, bottom line. And maybe not at all.
But I thought the right answer was it doesn't matter.
It doesn't matter, but here's what's going to happen so you understand, because you're focused on what are the values going to do. We're focused on it doesn't matter because we don't ride a 1 year or 5 year curve. We ride a 1 week or 2 week curve. So it doesn't matter. We give it back if we can't sell it. But what's happening, what I'm seeing from almost every student that's putting offers in is he's having brokers and agents come back to him and say, is your offer still good? You know I shouted at you. I know I made you look like a fool. I called you stupid, but was that offer you made still good? And the answer is, of course, no. We have to reevaluate the property based on today's atmosphere. Is the atmosphere any different? Well, if we're buying and you have no other buyers, we're in a rarefied air here. So what I'm focusing on for you students who are still on and listening, check in with what your multiplier factor is. We have changed it. Okay, very, very important. That's my answer. It doesn't matter. Francisco is absolutely right.
What municipality in Broward do you think is the best to invest in these days? It doesn't matter.
It doesn't matter. It doesn't matter. The worse it smells, the better it is. The worse it looks, the more money you're going to make. It's up to you.
Smell is the smell of money.
Smell of money. You know, when a student comes in, he says to me, I know every home in my neighborhood. There's 300 homes in there. I know the styles. I know the colors. I know them all. I tell them, whatever you do, don't invest in there. Put it out of your mind. You have a limited market, and the people are going to know you because you live there. Guys, listen to me. If you're going to do this right, what your traditional thinking has to be thrown out the window. Our students have been so very successful and made so much money because they don't care. It doesn't matter. They just go, look, they work in 3 counties. They make blind offers. In most cases, they may never see the home except to take pictures, and they can send somebody out to do that. Why not you? I say that at every meeting. I say that at almost everything I have. Why not you? There's no reason except things that you come up with. Francisco, we're going to say goodnight. Okay. If you have a question that was unanswered, send it to that blog, Dave Dinkel at Gmail. I'll answer it directly. Okay, all set, Francisco?
Somebody's asking for Rehabbing on how to get a discount, so I'm going to put a promo code right there and a URL. If any of you is interested in signing up for Rehabbing, there you have the information.
Francisco came to me almost 10 years ago with Rehabbing, and he said to me, look what I have. And I said, it don't work. It's not going to work, and you can't sell it to realtors. I said, your market is really investors. And he said, show me. So I've worked with him for 10 years. It's been excruciating at times, trying to understand what he's saying, but he's getting better on his English. But the reality is it's turned into a wonderful, wonderful tool. We don't own any part of it. Don't have stock, don't own any part of it, so on and so forth. But it is extraordinarily powerful if you use it, especially the part where you can make offers directly, write the contracts, and do all the other stuff. So if you're thinking about it, he has a huge amount of videos online. You can call and get direct contact with his support people. Learn how to use it. You can't hurt it, and use it as the most powerful tool that you can get for a very small amount of money, frankly. Okay.
One of the things that I want to put in there, Dave, is how they actually can access the mentoring program application. So I'm going to put that URL on too.
Okay.
You have, and that's it.
Okay. Thank you very much, guys. I appreciate everyone that stayed all this time. Talk to you soon.